Okay, thanks, Brian, for joining me today. This is Brian Picker with SWBC Mortgage, right? Did I get that right?
Yeah,
Um,
absolutely.
we've been working with Brian for many years, and we refer a lot of clients to him because he's so thorough and so great at understanding the big picture for people. And one scenario that we've come across a few times recently is that of co-owners of a house getting divorced. And so we send them to Brian. So Brian, one of our clients calls you and says, we're working out the logistics of our divorce. I'm trying to figure out whether we need to just sell the house and I buy on my own, or whether I can buy out my spouse. So, what does that conversation look like when somebody reaches out to you with that question?
Yeah, it's in the beginning, it's a little bit of fact finding. So I try to ask them some questions where they are in the process. Uh, some divorces are smoother than others, so sometimes there are attorneys that are already involved, sometimes there aren't. So a lot of times when someone is deciding that they're going to get divorced, um, you have to figure out, is there going to be a formal separation agreement? So when you're filling out a loan application, you mark it whether you're married, separated, or single. And so if they don't have a formal separation agreement and their divorce is not done yet, then technically they're still married and they mark it as such. But what happens is if they're separated, we typically get a copy of that separation agreement that kind of lays out if there's going to be alimony or child support, whether someone's paying it or receiving it. And where that comes into play is obviously if somebody is paying it, then that counts as a monthly debt. You have to qualify with that child support or alimony payment. If you're receiving it as income, then in order for it to be used as qualifying income, you typically have to receive it for a certain period of time. Usually it's around 3 months before it can actually be counted as income. And you have to show the track history of it, that kind of thing. So a lot of it in the beginning is the two parties basically figuring out, who may keep the property if they're just going to decide to sell it. I mean, I've seen the separation agreements spelled out a lot of different ways where one spouse, they may decide the wife, for example, gets to stay in the house. She has 6 months to refinance that loan and buy the husband out. Or it could be they just come to an agreement that instead of one of them keeping it, they want to sell the house and they have X amount of time to get it sold. So it can work out a lot of different ways. And sometimes if there's not a separation agreement, they basically go to mediation to kind of work out all these terms. And then there's an agreement that's done. It can just unfold a lot of different ways. Sometimes it can be as quick as 30 days. Sometimes it could be 3 or 4 months. You just don't know. So in the beginning, I'm more fact finding, trying to see where they are in the process. If they have anticipation of how things may fall, of if one spouse will stay there, if they're just going to sell it, that kind of thing. And then obviously you have buying, if you're buying somebody out, sometimes people will pull that money out of the equity of the house partially, and then they may use some other assets for the other part of it. So there's a lot of different ways they can do it.
Okay, so when someone wants to buy out the spouse and keep the
Yeah.
house,
Mm-hmm.
um, as you mentioned, there's multiple ways to do that. So obviously in an easy scenario, they would have other assets that they can use, or perhaps they divide the marital assets differently
Right.
to
Yep.
allow for that. But when it comes time to getting the spouse off of the deed and off of the mortgage,
Yeah.
what are their options there? Is it just refinance?
So the removing them from title doesn't require a refinance. That can just be done by an attorney and recorded at the courthouse. The mortgage itself, the only mortgages that are assumable are FHA and VA. So you're not gonna, if it's a conventional loan, for example, one party can't assume it from the other. So the only way to relieve the one party that needs to be removed is to refinance it altogether. So in this environment where a lot of people have a rate at 3% and rates are at 7 to 8%, it's not super appealing to have to do that. But unfortunately, there really aren't many options in that regard. So it just really depends. I mean, so sometimes you will run into the current mortgage is only in one of the spouse's names. It's not in, say, the husband, for example, is going to keep the house and the mortgage is only in his name. Well, there is no refinance required because the wife wasn't actually on the mortgage in the first place. Now, that's a little bit more rare that you see that, but that can come up as well. But really, it's in a I would say in a more normal transaction with divorce, if someone's going to stay, it normally requires they get the agreement will give them a certain amount of time to get that refinance done. And during that time frame, they're responsible for mortgage payments, taxes, insurance. The other spouse is not, and it's usually spelled out in the agreement. And now the other spouse that may be bought out, at that point, once they have a signed agreement saying that the one spouse is staying and responsible, that frees up the other spouse to go start looking for their house. They should be able to qualify for the new house without waiting for them to refinance and get them off, because they have a legal document that says the other party is responsible. So it shouldn't delay the spouse that's being bought out from purchasing and having, they don't have to qualify necessarily with the current mortgage and a new mortgage. But obviously, if they need that equity out of the house, that buyout, that could hold them up if they're waiting for that. So
Okay.
it can be a little tricky to time it
Okay,
all.
so in a scenario where they've decided we're going to sell the marital home, but I want to take my half of, my percentage of the proceeds and use that to buy another home.
Yep.
Does it pretty much work like anybody else that's trying to sell a home and buy a new one? They just need to either qualify for both, or they need to make the offer contingent on the sale and settlement of the marital home?
Yeah, pretty much. You've kind of hit the nail on the head, because it's technically, if they have the legal document that says the one spouse is going to buy the other spouse out, they don't have to make it contingent, because that agreement is relieving them. But if there is no agreement in place and they're still kind of hashing it out, they're not formally separated, and the one spouse wants to purchase before all that gets worked out, then they would really have to qualify with both houses at that point.
Okay.
And then you get into, from an underwriting standpoint, depending on, if the marital home is, say, an $800,000 house, single family, and now they're going to buy a condo that's 400,000. So they're downsizing, and they don't have an agreement, and they're married. Well, when you do the application, an underwriter is going to say, well, what's your motivation for downsizing? And it will be, well, I'm going through a divorce. And that, it kind of opens a little bit of a gray area, because again, you don't know, is there going to be child support, alimony? Like, you don't know some of the stuff that can come up. And we can't, as a lender, we can't make somebody get a separation agreement. So it's just kind of occupancy. When you're applying for a loan, you'd be applying for that condo as a primary, because they do intend to live in it, but they have this $800,000 house that, like, you have to make everything, you have to connect the dots basically. So it's,
Okay.
and that's why I try to get as much information as I can up front, to try to review it all and figure out a roadmap to say, all right, here's kind of how we get this done. I typically can talk to my underwriter ahead of time, kind of lay everything out. And that way it's more of a seamless process, and we're not kind of chasing our tail during the process. We've kind of done all the legwork up front.
Okay. And it sounds like it would be good advice for people to contact you very early in the process, maybe even before that separation
Yep.
agreement is finalized, so that they can
Yeah.
be thinking through all of the
Yes.
caveats, all the things they're going to need to be able to take that next step.
Yeah, because really what's happened is, right now, I just happened, there's probably 2 or 3 different divorce situations I'm dealing with now, and they're all a little bit different. It's similar to if anyone's just going to buy a house, you always want to get pre-approved as early as possible, so you understand your budget, what you can qualify for. Same thing, because if someone's going through a divorce, they should understand, all right, can I actually qualify to refinance this house and keep it and buy the other person out? If I don't, then I need them to buy me out, or I need to sell. So the earlier in the process you understand the finances of whether you're staying, going, or you're just selling, it'll allow you to probably go through that negotiation process with the other spouse and attorneys. And like, as you're working up the agreement, you'll kind of understand. I mean, the one about a month ago where they're still going through figuring out the terms, I actually did a pre-approval for husband and wife. I did the separately, because they hadn't decided who was going to stay, and they hadn't, or they may end up selling. Like, they just really don't know, but they wanted to figure out what the options were essentially. So yeah, I mean, I always, because there's no harm in doing that early. I mean, there's plenty of times where I talk to somebody in a divorce situation, I may not hear back from them for 3 to 6 months, because it may take them a while to kind of hash through all this stuff. So the earlier in the process they understand everything, probably the better for them. Makes it a little smoother.
Yep. All right. Sounds good. I know we like to talk to people early in the process as well. And
Yeah.
even if it's got a long run time until a transaction actually is in front of you, always better to start early and have all the
Yeah.
options laid out. So,
Yeah.
so good advice. Thank you so much. I appreciate your time.
Yeah, absolutely.